Cash budgets are another topic that I think could come up in 2026. Haven't come up. I'm pretty sure it's 2022 last time there was a cash budget, so it's about time. And it's a good one that could be Section A, like 4 to 8 marks, or an involved 14 marker in Section B with the link 6 marker. So what you've got to be careful of here is you'll look at your sales and so how much you've actually sold and how much of it is going to be paid in a particular month. And so if you look at the policy, they've got 20% of sales are in cash, so you know you're going to receive those straight away. So in any given month, 80% of credit of those 50% are collected in 1 month and 50% are collected in 2 months. And then you've got provision for doubtful debts. We don't look at the provision for doubtful debts. That's a profit adjustment, but it could be in there as a alien items. If you have that, that will be a Section B item to ignore. So if you looked at August for the credit sales, so if we're constructing a cash budget, from the credit point of view, you're going to 80% of July, because obviously that's the amount that's credit, is 64,000, and we're getting 50% in a month. So that 50% from July would be paid in August, and then we'd also be receiving 50% of June. So it's a prediction of what we'll receive from June. So because that's going to be 2 months, so we'd have 32,000 coming in from August and 28,000 coming in from June. We've also got 20% cash sales from August, so that'll be another 18,000. So our cash inflows will be added in that way. September, same process. We would have 50%, the other 50% in July, and we'd also have 50% of August, so 80% 72,000. Half of that is 36,000, and then we'd also have the 20,000 for the 20% cash sales. So not too bad at all. So you'd have your overall inflows at the top of the cash budget. I've done a whole work through on a question in another video, but just to go through the key things, the whole inflows at the beginning, and then any cash outflows at the bottom. So we've got purchases are paid a month in arrears. Sometimes students don't like the numbers, don't like that wording, sorry. In arrears just means you pay it later. So July is going to be paid in August, August is going to be paid in September. Labour is paid immediately, so nothing to worry about. Overheads 15,000 per month, so all else being equal would be 15,000, but it includes depreciation, it includes an increase in provision for doubtful debts, both of which are non-cash expenses. We've got to deduct those, so it would actually be 11,500 for cash outflows. An accrual, an August electricity bill of £2,000 is to be paid in September. It's being paid, so therefore it would be in the outflows. If it was an accrual that hadn't been paid, then it wouldn't be in there. Make sure you know the layout. So you have opening balance plus net cash flow, which is your inflows and outflows, difference between those for the month, and that gives you the closing. Closing then becomes opening. This one's got a 4,500 overdrawn balance, so you start with a negative figure. You could have ways a cash budget useful. So benefits, it helps to identify if you've got any extra money that you could invest, or if you've got shortages, so you'd have to apply an overdraft or further sources of finance to deal with that. It could help with the loan application. You can show them how much cash you've got and you can repay it, and also assist decision making. So obviously you can make various decisions based on how much cash flow you've got. Problems, timings could be different, so customers could pay you later. That could cause a massive issue. There can be external factors that would influence how much your costs are or how reliable payments will be. And it's focused on the short term, which is great because you need cash to keep going. But in the longer term, you really need to grow the business and you might have to have an overdraft to keep you going, and the cash budget might make you think that's a bad idea. So you could have a why is cash flow useful or cash budget useful, or it could be about how you could resolve cash flow issues. So that's going back to liquidity issues such as delaying payments to suppliers, chasing up trade receivables, offering cash discounts, that type of thing, but focus on cash, not profit items. So how you can get money in quickly or stop money going out. Okay.